Hello, everyone, and welcome to today's NASC Preferred Supplier webinar, How to Protect Your Business. I'm Bill Parker with NASC, and I'll be moderating today's webinar. It's my pleasure to introduce Kathy Francis with Specialty Insurance Partners. Kathy is a seasoned insurance professional who's held sales and leadership positions with Wells Fargo Insurance for 27 years before breaking away and starting her own retail insurance agency. Specialty Insurance Partners in 2013. Kathy has over 45 years of insurance industry experience and holds special designation of Certified Insurance Counselor with continuing education on a regular basis. Kathy's expert team of 5 insurance pros has been in commercial insurance for a combined 100 plus years. And almost since NASC's inception, Kathy has been a great supporter of NASC's mission and members. Specialty Insurance Partners specializes in the nutraceutical, dietary supplement, and cannabis industries, as well as general manufacturing. Kathy lives in Colorado Springs with her husband and has 2 adult children and 2 grandchildren. And with that, introduce you to Kathy Francis.
Good morning, good afternoon, wherever we are. It is my pleasure to meet with all of you. We'll get started. And if I start talking too fast, somebody needs to slow me down. Thank you. All right, so these are some of the coverages that are traditional. I would say most members, most people in the dietary supplement business would need. We're going to touch on some of these and see what kind of exposures you may have. But first, I want to explain the types of insurance markets. We've got standard insurance markets like Travelers, Hartford, Liberty Mutual. Then there's surplus lines markets, and that's where you go when you have harder to place risks. And the standard markets are declining. So some of my conversation is going to be mostly surplus lines markets, but I'll be throwing in a little bit of standard here and there on a coverage. There's other market categories as well, such as reinsurance, but these are the ones that we're really going to be talking about. Okay. Our first item is property insurance, and these are your tangible assets. So the standard exposure that most companies would have would be for the physical building and or your personal property. And this is all your stuff. So if you take your building, turn it upside down and everything falls out, that's going to be business personal property. There's another category such as property of others. So if you're using a fulfillment center, that might be something that they need on their policy, or then you would write your own business personal property policy. The insurance companies are getting pretty strict on the perils and the valuations that's offered, depending on the age of the building. So they are going to need the construction, the year built, the square feet that you occupy. How many stories is that building sprinklered? Does it have a central station burglar and fire alarm? And now we're getting to where if buildings are 25 years or older, we need to provide the year that updates were done to the HVAC, plumbing, roof, and wiring. And that doesn't even mean that you are not owning the building. Your stuff is in that building from a content standpoint. Some of the perils that are our choices, we start out with basic perils, which are named perils such as fire, lightning, wind, hail. Then another category is called broad perils, and this is where we're going to add freezing and plumbing. There'll be some coverage for burglary, break-in damage, for falling objects like tree limbs and weight of ice and snow. But special perils is the broadest, and that's the one that we always aim to get. And with this one, instead of the perils being listed, the exclusions are listed, such as earthquake, flood, war, power failure, things of that nature. Our valuation form choices are replacement cost or actual cash value. So replacement cost is the best form, and actual cash value considers depreciation. Now, we are having some wildfire territory issues, and that's depending on the wildfire score. that many traditional insurance carriers will decline, and we're having a specific problem in California. But there is a California FAIR plan that can provide basic fire insurance. And we've run into a couple issues this past year where there's absolutely no binding authority available anywhere in the marketplace in some of the wildfire areas. Your loss runs are required to bind coverage, or if we can't get those, then a known loss letter may work with some of the insurance companies. Stock throughput is another coverage that's become more expensive in the past couple of years due to the insurance companies pulling out of the market due to losses. And mainly this coverage was purchased by just any type of entity. So we had autos, goods of just any kind coming from all over the world. And between pirates and hurricanes and other types of storms, ships had been overturned and sunk. So a few of the carriers pulled out of the marketplace. But the important part of this coverage is from the time you own an ingredient until your client receives the product, there's coverage. So while the product is being made, while it's in process anywhere, and then there's two parts to the policy. It's the stock inventory, including processing locations, and then the transit coverage. So if we send you an application, there's two tabs. The first tab is going to be the application, and the second tab is a statement of values. And with that, like any of the other property policies, we need all the locations, the limits you need, the building construction, the year built, square feet, sprinklered, alarm, all of that kind of stuff. And these carriers are going more to looking at 20-year-older buildings needing the year that things were updated. So this is needed as your inventory is located in these buildings. And if it's an old building with no updates, your inventory is at a much higher risk for the claim. General liability is basically protection for bodily injury or property damage that your business causes. So this is insuring you for any harm that you can cause to the public, mostly via your product. The trigger for coverage, sorry. The trigger for coverage to respond is the bodily injury or property damage that your business caused. The product used can cause harm to the customer that bought your product. And most policies are going to start out with a 1 million occurrence, a 2 million aggregate, a 2 million product completed operations aggregate, a 1 million personal and advertising injury, and things like that. That would cover would be libel, slander. Another thing in that advertising section, if you use my grandkid's photo on a brochure and didn't have written permission, or you purchased a photo at a Photoshop thing, but used it in a way that could cause harm to that individual. There's also then 100,000 of damage to premises rented to you. And this is not a coverage for you. This is a coverage for your landlord. So this would be you left the coffee pot on, a fire started, you damaged the walls, and the landlord needs to repair that. So they get that, not you. There's also 5,000 in medical expense, which is a no-fault coverage. And that would be a slip and a fall. I come to your office to meet you. I slip, crack my ankle, and I just want you to pay my medical bill. I'm not looking to have a suit against you. Now, we do have some issues that have come up on the East Coast recently with putting multiple entity names on a policy. So example is you own two companies and want to insure them both on the same policy. General liability and work comp, so both of those areas are affected. The employee of one entity is doing repair at an entity of your second location and is injured. So he's not an employee of that second entity. The work comp is going to pick up his injury. And again, both policies or both entities are on the one policy. And if the injured employee then of entity one is going to get an attorney, sue entity two, which is not the employer, under the general liability for premises issues like a slippery walk, a driveway, a bad ladder, you didn't shovel snow, things of that nature. So think about that. A lot of people want to do that just to save money, but sometimes that's not the best practice. In our liability, here are some of the coverages that we look to be included. Depending on your product line, carriers offer different coverages, and it's not always an apples to apples. Like we have some carriers that include terrorism, others you have the option. Some offer some additional insured endorsements, but not all of them. And the big endorsement that you need is the additional insured by written contract. That is one of the broadest ones, but you do have to have a written contract or agreement with your vendors or your suppliers as to who is being named on what policy. These are some common optional endorsements. Some carriers will offer the California Prop 65 expense automatically. The product withdrawal expense is not as easily obtained, but some carriers again will do that. Let me back up to Prop 65, just in case you're not selling in California. The California law requires to keep citizens safe from harmful stuff, such as if you're growing a product, an ingredient in the ground, dirt automatically contains lead. So too much lead would be harmful. So, I mean, if you rent a car in California, you're going to see that sticker as well. The product withdrawal expense, and this is for you, not for your clients. So if you're selling product in a store with your name on the label, and now you have to get that back, this is the coverage for you. However, if you're a manufacturer and you sent out product to the clients that you made product for, this is for you, not them to get their product off the shelf. So that's a big misconception. The manufacturer's errors and omissions, referred to as E&O, this is that you have caused financial harm to your client. And professional liability, sometimes that term is the same as E&O. It just depends on what it is you're doing. It could be more from a consulting and you're charging a fee, so therefore you have an exposure. So the manufacturer's E&O and the professional liability can be very similar. Batch clause is a coverage that we try to get as often as possible. And what this means is if you've got one batch that caused many claims, we may be able to only have one deductible applied, not a deductible to each of those items. Waiver of subrogation. Some retail companies are requiring this. So read your contract. The same with primary non-contributory. They want to be an additional insured on your policy, and they want the waiver, the primary non-contributory endorsement, as well as some carrier or stores are requiring a 30-day notice of cancellation, which it is not always free by the carriers. Sometimes it's $50 to $250. In the liability, we've got a list of exclusions. So this is kind of the main thing. So there will be a specific list of ingredients, but from the carrier, banned ingredients will be excluded, pharmaceuticals. The marijuana CBD may have an exception back for any THC that's less than 0.3. Your professional, which we just touched on, is definitely going to be excluded in the general liability unless we add it. And pollution will always be. Employment practice is a separate kind of coverage, as is cyber. So each insurance company has their own specific list of things that they exclude in their forms. Red flags. So your website is looked at. The FDA website is looked at about you. Was your application complete or incomplete? So a lot of these items are going to be, the carrier's going to stop, going to have to do a harder underwriting, A lot of times they're looking for financials, things of that nature. Let's see, other items needed. Most carriers want to know what they're going to insure. So labels, financials are being requested more and more. And if they're audited, even better. If you have brochures that you're handing out, your website, your federal ID number, they want to know when the company was started. Your policy for product liability is probably going to be claims made, and that will have a retroactive date. So there's two forms of general liability. One is occurrence, which says whenever the claim occurred is the policy that's going to respond. A claims made says whatever policy is in force when the claim is made to you. Then there's a retroactive date, and that is the first time that you had a claims made policy. So as you move from year to year, you want to keep that retro date from way back when. Let's see. Oh, manufacturer and suppliers certificates of insurance. The suppliers are being looked up. So if they've got a bad reputation, then the carrier is going to come back and ask questions. Just a note I wanted to make on hemp seed versus the rest of the hemp plant. We have standard markets like the Travelers or the Hartford or Liberty or others nationwide who will write a product, will write a policy if you only have products that have hemp seed in it, and they'll write it on an occurrence form. The rest of the hemp plant is considered to be CBD. Last couple of years, we've had a huge problem with people adding hand sanitizer to their list of coverage or products that they're offering, and there's no coverage for the hand sanitizer unless your carrier knows it. A lot of times you're going to be asking for certificates of insurance, and this is all the stuff that needs to be put on. Couple items to note is you want to make sure that your marketing or sales or creative team keeps your CFO or insurance contact updated on what they're doing and if insurance will cover these new products. We've been seeing some companies all of a sudden on their website, they're doing CBD and we know nothing about it. So then we got to backtrack and see if we can get that coverage added. So recommendation is when you've got, when you're putting up a new product or an updated label, send a copy to your insurance agent. And if you are discontinuing products, you want to notate on the insurance application with the month and the year that it was continued, and you want to keep on that your insurance list forever. From a defense standpoint, if somebody has that product, even though you've discontinued it and it's caused harm to them, you definitely want to make sure that you're going to have defense coverage. Many manufacturing certificates are showing that they have their own product liability. We've received a few that only have the general liability. So if you're going to a manufacturer, you definitely want to get a certificate showing that they've got product liability in place. Amazon, for example, is we work a lot with having to provide certificates to them. They require a 30-day cancellation notice, depending on the product type. And sometimes claims made products are an issue. They want the waiver of subrogation, primary non-contributory, and be added as an additional insured. So an example is we have a client who has dog treats. That's an occurrence policy, probably with the standard market. We have another client who has dog treats with CBD. That's going to be a claims made policy. And we're having a situation right now to where Amazon will not accept it because they're seeing dog treats, not a CBD product. Speaking of CBD, you really want to make sure you know who your sourcing is. There's a lot of black and gray suppliers out there who are undercutting prices, and you really are getting what you pay for. So we're seeing claims occurring in the CBD world, mostly because your label isn't what it says it is. Topicals, more insurance companies, surplus lines will write them. I'd say majority of them do. Ingestibles, there's a few carriers who will not write, but we still have a good 6 to 10 that will. Again, CBD versus the hemp seed. Want to make sure you know the percent of sales. So your policy is going to be rated on gross sales. And if it's 100% of CBD products, then this 3-4 carriers, yep, will write it. Some of the other ones won't because they only want to see up to 20% of your production line to be CBD products. So standard markets are still staying away from the traditional CBD. They will write the hemp seed if that's the only product you have. But we have several surplus lines markets who just love the CBD accounts. Hey, other coverages, we've got business auto. If you've got a fleet of vehicles or any company-owned vehicles, to insure it, we need the year, make, model, VIN number, and the cost new of that vehicle, and then the driver's information, name, date of birth, driver's license number, and the state that it's licensed. The premiums are based on the vehicles and the drivers, plus the radius of driving. So from your office location or plant, are your people traveling 50 miles, 100, 250, 500, or over 500? There's also a coverage called hired auto, which is renting vehicles. It provides liability only. And you can purchase hired physical damage, which then will insure for comp and collision on that rented vehicle. So when you do go to the rental desk, they always make you sign, do you want to include or exclude? So if you do it a lot, it might be worth looking at higher physical damage. Now, the only negative about that is there's no coverage for loss of use included, while if you rent from the rental car company and buy their insurance, they automatically provide that. And that is when the rental company is getting the vehicle repaired and it's not able to rent. So they're not making any income on that vehicle. And if it isn't an accident, there could be diminished value and there's no coverage for that under the hired physical damage policy or line of coverage. We had a new situation come up. If you're a PIP state, which is personal injury protection, there is no coverage for a non-employee passenger that is injured. And your employee is covered by work comp, but that passenger would either be covered under their own work comp if on business with your employee, or there may be no coverage. It'd have to go to their own policy. Some of the PIP states that are still out there, and this list keeps changing, is Florida, Hawaii, Kansas, Massachusetts, Minnesota, Michigan, New Jersey, New York, North Dakota, Oregon, and Utah. Then there's also coverage for non-owned autos, and this is your employees are using their own personal vehicles for business. They cause an accident and them and the entity gets named in a claim or a lawsuit. The employee's insurance is going to protect them, but not you. This is the only coverage that will protect you. So we have other coverages to consider as well. We touched on the general liability, which is the premise and the product liability all in one policy. And this coverage protects the public from you harming them. There is property coverage, and this is whether a business owns or leases its space. Property insurance should be a must. This is covering your equipment, your signage, inventory, furniture in the event of a fire, storm, or theft. There's items, though, of considered more mass destruction, such as floods, earthquakes, and those are generally excluded under standard property insurance policies. Those would be standalones that you could go by. The work comp will cover medical treatment, disability, death benefits in the event an employee is injured or dies as a result of his work with your business. It does provide benefits to the employees who become injured or ill on the job. And in the unfortunate event that an employee dies due to a work-related injury or illness, this coverage can provide benefits to the employee's family. Again, I would beware of putting multiple entities on one policy for that example that I gave you. There's also professional liability, which we touched on, also sometimes known as errors and omissions. This does help protect the business against actual or alleged errors and omissions when providing professional services. You caused an economic harm to a customer, possibly based on the advice that you provided. And this is generally you're getting a fee. And then media, and this is really your company is creating and producing, broadcasting content such as articles, videos, photographs, books, television programs, or blogs. If the answer is yes, your business needs some form of media liability insurance. And this will protect you if you are sued for things like plagiarism, defamation, and invasion of privacy. Next is employment practice liability insurance. And we refer to this as EPL or EPLI insurance. And it provides coverage to employees against claims made alleging things like discrimination, which could be sex, race, age, disability, or wrongful termination, harassment, any type of other employment issues such as failure to promote. So some of those EEOC type items fall in there. And whether you're a small or new business, many times those are most vulnerable to employment claims. And a lot of that is because they usually lack a legal department or employee handbook detailing the policies and programs that guide hiring, disciplining, or terminating employees. Cyber insurance, we've got lots more we're going to talk about on this one because it is so popular right now. But this basically is protecting the business's liability for a data breach where your clients or employees' personal information, things like social security, credit card, is exposed or stolen by a hacker or other criminal who has gained access to the firm's electronic network. Hacking, ransomware, and various other coverages can be included in this policy. We also have directors and officers, which we refer to as D&O. This protects the personal assets of the corporate directors and officers and their spouses. And this is in the event that they are personally sued by employees, vendors, competitors, investors, customers, or other parties for actual or alleged wrongful acts in managing a company. And we always want to be sure that the entity is included as a covered party. Okay, now we're jumping into cyber. We have a lot to talk about on this one. What is cyber? It's just basically a malicious and deliberate attempt to gain access into another organization's system. Many of the insurance companies now this past year are requiring multi-factor authorization, which they say just MFA, or they will not provide a quote for all the coverages you need. So you sign into, I'm signing into Liberty's system, for example. I get an email and I have to put a code in order to access it. So that's, I've signed in as one and the code is number 2. We've got 6 major risks that every business is facing. So I went to do some research, and there is the Identity Theft Resource Center, known as ITRC, saying that through the first half of 2022, the number of data breaches was down by 4% compared to the same period last year. However, they said that 2021 set a record for the number of data breach events that occurred. They also reported that there was a 2% increase in data breaches from Q1 to Q2 in 2022. So deepfakes. This is something that's been developed from artificial intelligence technology, where they can take an image of one person and replace it with another person's likeness. There has been over 85,000 deepfake videos reported in 2020. Ransomware. I mean, we see that all the time, big stores, little companies, it just really doesn't matter. They're going to hold your website for ransom. We've got smart home devices. Always recommend don't use your factory settings, pick a strong password, check the privacy settings and permissions. You want to change your passwords frequently, and you want to check for updates regularly and set up on a separate network. Data privacy, in any type of data that is breached that you hold in your possession, you are responsible. Spear phishing, this is a type of social engineering scam that attempts to fraudulently obtain sensitive information using email. So you want to train your team not to click on links unless they're positive that they trust the source. And you want to have an antivirus software and use the two-factor authentication and other security measures. So human mistakes cause 21% of the data breaches that are out there. And this is according to a 2018 Verizon Data Breach Investigations report. This is kind of little, but this is info from 2021, and we know the number of attacks have increased. So I think your categories would be the distributor or the manufacturing. So distributor was up 18% and manufacturing was up 41%, but having fewer hits per week. This is per week. The most common attacks, sorry, are phishing, and this is the fraudulent emails to link a recipient to a malicious file. And we're seeing small businesses with less than 250 employees are really the high on the target list, and that's regardless of the number of clients you have. But that was accounted 43% of the targeted cyber attacks last year. So ideally, every company, government, organization should follow some industry best practices to ensure their IT infrastructure, data, customer info is secure. If you're doing anything, providing any type of product to the military, which we've got one or two out there who do, there's even more problems if you have a claim. Recent research does indicate that most companies lack adequate data protections and have not implemented in these cybersecurity best practices. So you're very vulnerable to data loss, financial costs, and reputational harm. And some of the biggest reasons why you are being targeted is the lack of security infrastructure. You don't have that formal IT department to help protect your business. A lot of small businesses equate size to risk. So you think you don't have many assets like property, data, or even as much money as a large enterprise, but the target does. So they don't really feel as threatened by you, and you're less likely to spend the time and money on a measure to protect yourself. Cyber criminals know that mom and pop shops do not have the funds, the money to spend on the resources to protect the business. So that just puts you at a greater risk. Any of you who are small business owners, you're busy. You're running your company. You're not an IT expert. So sometimes that just leaves absolutely a big open for data breaches to occur. The good news is that once you are aware of a security challenge, small businesses can actually have a simpler time getting more secure than large companies with a larger staff and larger budgets. Small businesses might be small, but that doesn't make them insignificant. So some of these attacks, ransomware is the big one that we see all the time. So hacking happens everywhere. What client info are you collecting, and where is that data stored? Businesses servers can be tested by a hacker many times when phishing before that hacker actually takes your system down. We had a few clients which found a hacker tried for 3 to 4 months with dings to see if they could penetrate the system. We did have one client which was taken down, and it took them 9 months to get their machinery, email, voice message, everything back up and running. And that was only at 80%. They were at 1.5 million in expense by that time, and no ransomware was paid. Homeland Security, FBI, local police were all involved, and the instruction was do not pay ransom. They did have a 1 million limit for cyber coverage. So they actually were out of pocket that $500,000. So again, coverage is provided for any failure to protect private information in your care, custody, or control. Each state is going to have requirements of what you have to do if there is a breach. So the information can be paper, electronic, unencrypted. It can be mobile up in the cloud. So think about getting a quote for cyber liability with this upcoming insurance year that you'll be working in. We hear almost daily of situations of hacking. So this is one of our most popular policies that provide these listed coverages. But this carrier does require that you have the multi-factor authentication in place. So you've got the business interruption covering your lost profits, the data recovery, the extortion ransomware is available. Bricking, this is when a computer and electronic hardware are damaged beyond repair. We've got the funds transfer fraud. Criminal is deceiving the bank or institution. We had something very similar with another type of client. Network security and privacy is your third-party liability cost for malicious code and sent to someone else's system. PCI, this is covering your fines and penalties imposed by the banks or credit card companies. We've got the regulatory, your legal defense and fines by regulators, which we have seen as well. That coverage part has been used. Computer fraud, that's covering the funds or property stolen from a hack, the media liability. So when your content triggers legal action, then you've got items such as defamation, libel, slander, copyright, and invasion of privacy. Your social engineering, this is the cyber criminals deceive a business to transfer funds willingly. And we have seen that more often as the claims that are submitted than any of the other claims. Cyber extortion, expense and payments to a third party to avert a potential damage to malicious code or data corruption. So our client that took the 9 months to get 80%, they really were dinged for a while and didn't know it, but their network was separate, but they were a government contractor for a couple products. So we had more and more government involved in that type of claim. So what are you collecting? You got to really think about the information, because a lot of times you're on the phone and you're just writing down things, and a customer may say, oh yeah, just keep my card on file. You really don't want to do that. So credit card info, bank account info, the checks, the emails. When you all send checks to us for premium, we deposit it, we stamp it, and then it goes in a bag in a locked drawer to not have your checks be seen by anybody outside of our company. You collecting any phone numbers or driver license or birth dates, any passwords, social security numbers? You most definitely are of your employees. And are you using any of these items to write down the stuff? So a paper pen, you're logging it in a computer, in a tablet. Do you have any of this data in a mobile phone? And what are you saying on your website? So your website can be held for ransom, or you could have a claim against you because of something that your website is doing or saying, taking them to a malicious or vicious site through a link. And then where are you storing things? On a spreadsheet, on your computer, in the cloud, an email, a notebook. We hear all the time of people who have the password, and it's like, oh my gosh, how many times have you been told? So we had, in just the past few years, some big company attacks. I'm sure you heard Uber had 57 million drivers and riders data put out there. The Marriott Hotel had 500 million hotel guests data exposed. They had another one in July of 2022 that had 20 gigabytes of data stolen, or it was breached. I shouldn't say stolen, but breached. And that was accessed by a single employee's computer, believe it or not. Things like flight information, internal business docs, corp credit cards, all that information was stored in the Marriott system. In June of this year, British Airways had a $380 million credit card payment compromise. Equifax was compromised. Capital One had 100 million people with names, dates of birth, social security numbers hacked by a former Amazon employee while working for Amazon Web Services. We had the Shields Healthcare Group for 2 million. In May, we had 1.8 Texans exposed through the Texas Department of Insurance compromised. In April, it was Block, which was formerly known as Square. 8 million customers were compromised. In March, Microsoft had a hit. And then back in January, we had the crypto where 483 wallets were compromised and out of that 33 million was looted. So cyber is big. I just can't say enough where you really, really need to look into carrying that policy. So thank you very much. There are other coverages such as crime, earthquake, flood. We've got foreign liability, some patent infringement, trade credit, and there's more. I really just wanted to touch on the ones that I think are the biggest exposures to a standard company. So let me know if you have any questions, and I'd like to turn it over to Bill at this time.
Circling back to the liability for contract manufacturers versus a company with their name on the label that manufactures their own product. If they indicate on the label that a product was manufactured for a company by another company, is there a transfer of liability by virtue of what's on the label?
Yes, there is. And part of that is the carrier of each of those companies are going to say, are you holding each other harmless? And, you know, like what does your contract say? So because both names are on the label, if there is a claim, you're both going to get pulled into it. So now it becomes to, in your written contract, who's an additional insured, who's not an additional insured. As a manufacturer of property or products of others, I would never add anybody onto my policy sharing my limit. I am the manufacturer of my own product line. You don't need the manufacturer's E&O because it's your name on the label. So it's just a little bit different. Coverages are needed when you are the manufacturer of products for others.
As far as hemp CBD is concerned, is there an evaluation of the supplier that is done by the insurer prior to the insuring your company if you're going to use CBD? Are they going to evaluate your supplier?
They are going to look up that supplier on FDA and just Google them and see if there's any situations in which that supplier had a negative, had a recall, had a withdrawal, any of those types of things. The main markets that we have, their application specifically asks for who is your manufacturer, city and state, and who are your suppliers, city and state. And then they may come back with more questions about your supplier.
And then as far as websites are concerned, if there are links on a company's website that links to something that may be a bad claim or injurious, what is the company's liability if they are linking to another website?
Well, you're responsible for your links. So your cyber policy, we want you to have that coverage added because if you, for example, don't have coverage, you're responsible. So you're going to possibly see claims from people who clicked on the links on your website and were taken somewhere, and that could have caused them harm, such as, maybe they got a, what am I calling it? A virus from clicking on there and took their system down. So they're coming back to you for that kind of a claim. you
Okay.
have the responsibility.
And then lastly, you mentioned the multi-level authorization. Other than that, is there other evaluations that an insurer would use to evaluate your insurability?
Yes, I mean, they're looking at your website, and depending on what you do, they may want to see a financial. But the big thing right now is, what do you say on your website? How vulnerable are you? There's specific applications, so there's going to be questions that you have to answer, and it's, do you do this, do you do that, do you have training with your employees in the handbook, and so they just ask a bunch of different questions about any type of a business. But we really recommend making sure that you at least communicate with your employees about not clicking on links. That's the biggest one that we see, and that's a question on the application.
Is there such a thing as having cyber practices or cyber best practices written into SOPs for a company?
Yes, that'd be great. And, part of it, not all the carriers include cyber liability on their general liability policy. I think we've got maybe one or two. So it's generally a separate policy, which I recommend. You don't want to use those limits up for more than one type of coverage. So your general liability, product liability policy, in my opinion, you want that to protect your company if you have claims brought against you. The cyber, you want to have a limit available of $1 million or so to protect you in the event of a breach. So we do have one carrier or two who add some cyber, but it's way more limited than what you get on a true cyber policy.
Kathy, thank you very much. And thank you for your support of NASC. And thanks everyone for attending.
My
And
pleasure.
with that,
Thank you.
Thank you, everybody.